In the fast-moving world of financial markets, companies have more than one way to go public. For decades, the initial public offering, or IPO, was the undisputed standard. But in recent years, the direct public offering, or DPO, has emerged as a leaner, more transparent alternative. While both routes place company shares in the hands of the public, the journey each takes is strikingly different. An IPO is the classic approach. A private company, often growing rapidly and in need of new capital, decides to issue shares to the public for the first time. This process is carefully managed by investment banks known as underwriters. These financial institutions guide the company through complex regulations, build excitement among investors, and most importantly, set the initial price of the shares. But IPOs come at a cost. Underwriting fees alone can consume 5 to 7% of the total funds raised. Add in legal costs, compliance requirements, and global marketing campaigns known as roadshows, and the expense quickly climbs into the tens of millions. Still, for many firms, the trade-off is worth it. IPOs provide instant access to enormous pools of capital, credibility in the markets, and the stability that comes with underwriter support. A direct public offering follows a different path. Instead of relying on underwriters, a company lists its shares directly on an exchange. No new shares are created. Instead, existing investors, such as founders, employees, or venture capital firms, offer their shares for public trading. By bypassing banks, companies save millions in fees and allow the market itself to determine the price. This transparency, however, comes with volatility. Without the cushion of underwriters, share prices can swing sharply from the moment trading begins. IPOs and DPOs also differ in purpose. IPOs are designed to raise new capital for expansion, acquisitions, or paying down debt. DPOs, on the other hand, are less about raising money and more about creating liquidity. They give early shareholders the ability to sell their stakes, turning paper wealth into cash. For investors, this means greater access, but also greater risk. In an IPO, price discovery is guided by underwriters who balance demand to ensure a smooth debut. In a DPO, the price is left entirely to supply and demand. The result is a system praised for its fairness, but one that can create uncertainty for companies and investors alike. The differences are evident in real-world examples. Facebook and Airbnb, both of which went public through IPOs, raised billions in fresh capital. This funding allowed them to scale rapidly, expand globally, and strengthen their balance sheets. The involvement of underwriters also provided credibility and market stability, but IPOs came with drawbacks. Both companies faced high underwriting fees, pressure from quarterly earnings expectations, and in Facebook's case, controversy around whether its shares were fairly priced for retail investors. Spotify and Slack, on the other hand, chose direct public offerings. By skipping underwriters, they saved tens of millions in fees and allowed existing shareholders to gain immediate liquidity. The direct listing also reflected confidence that their strong brands and user bases could attract investors without the traditional IPO roadshow. However, drawbacks included the lack of guaranteed capital. Neither company raised new money from the listing, and share price volatility was significant in the early days, creating uncertainty for some investors. Each path reflected a different set of priorities, one focused on raising fresh capital, the other on efficiency and transparency. Ultimately, the choice between an IPO and a DPO depends on a company's goals. Firms seeking vast sums of new money and institutional backing often turn to IPO. Those with strong balance sheets, sufficient funding, and a desire to avoid excessive fees may opt for a DPO. Two strategies, two very different journeys, but both with the same destination: the public markets. To learn more about Colonial Stock Transfer's IPO and DPO services, visit colonialstock.com.